Good evening and welcome back to Be Rich. Markets have rallied not only here in India but also yesterday night across the globe. The markets initially were 1% up when the results came. By mean results, the results of the Fed Reserve's meeting. The Federal Reserve decided to increase interest rate by 0.75. And when the press release came, the market did not rally much. It hovered around that 1% and did not move up further. Around 2:30, Chairman Jerome Powell came out for a press conference. In that, he was bombarded by questions on the future direction that the Fed would take, in which he made a remark. He said that if the data they are data dependent, and if the data shows that further rises in interest rates could be moderated. Basically, what he said is the inflation really starts to fall, then data prices and the data suggests that then it is not cast in stone that the Federal Reserve will increase rates in September by 0.75. It can be 0.5 or 0.25. When asked how much that rates would go down, rates could go up by, he pointed to a report written out by the Fed, where the Fed expects that the maximum peak rate would be 3.5 by the end of this year and would peak at early fourth. That means they expect another 0.5% increase and the Fed rate to be between 4 and 4.25 before passing. So basically, Jerome Powell says that he will expect interest rates to be 4 to 4.25, whereas the market futures believe that the rate will peak at 3.3%. On 14th June, when the S&P index was at an all-time low, the belief was that the Fed would increase interest rates up to 3.9. Ever since then, markets have rallied and their expectations of peak rates have fallen, and it is today at 3.3. What is the logic behind this? The logic behind this is very simple. The market expects that the Fed will chicken out due to heavy political pressure as soon as the US gets into a recession. The second quarter data is expected any time now, and it is expected that the Fed would release a data which says the Fed will not dip into a recession but will have a modest growth. There was an unexpected recession in the first quarter of minus 0.1. Therefore, a contraction it is. A recession is 2 quarters in a row of declining growth. Therefore, what the markets expect is what has been happening so long and what I have been explaining to you as a Greenspan put is once the Fed sees that growth is affected badly and job losses keep going up, immediately the Fed will take the foot off the pedal, and next year from March the Fed will cut back rates and things will go back to normal. But this is the interpretation of the market. But actually, if you go by the letter and spirit of what he said, when asked if the growth slows down, will the Fed take the pedal of the gas and not increase interest rates? To which Jerome Powell retorted that even if they had to constrict growth in order to crush inflation and bring it back to 2%, they would do it. So Jerome Powell has clearly said that he will continue to increase interest rates till inflation comes under control. The market expects that in the next quarter, if there is a recession, then the Fed will bend over backwards and stop raising rates. That would be too much to expect, because even though gasoline prices at the pump level have collapsed and are going down, food prices are still high. Core inflation, which is inflation stripped of fuel and food, is very strong and is expected to increase. As I have argued several times, it has seeped into the labor market where union after union are demanding higher pay for the same jobs. I talked about the United Airlines where pilots striked for a higher salary and the management blinked. Amazon owner Jeff Bezos and President Joe Biden have had a slanging match on Twitter on who is responsible for inflation. But whatever the debate may be, it is clear that Amazon is being forced to by is forced to increase the cost of wages paid so that it can pay so that it can get people to work. At the wages it was paying at the pre-pandemic level, people are not simply coming to work. So there is definitely wage pressure as Amazon and United Airlines has shown. Once inflation feeds into wages, it becomes sticky. While commodity prices and fuel prices may come down, services inflation has been soaring, which is normally sticky. Once a doctor increases his fees, he is not going to bring it down. Or when an attorney increases his fee, he is not going to bring it down. There has to be a element of destruction of demand before which the price inflation comes down. As noted economists who are also Democrats like Larry Summers have shown that from 8 to 4 will be very easy for the Fed to reach. But from 4 to 2 is going to take a long haul. If the Fed indeed blinks, as the market expects it to blink, then as soon as the Fed stops raising rates and starts to cut rates, inflation will quickly catch up and go back to 8%. This is what happened in the last decade of the 70s, until the Fed corrected its mistake completely by crushing wages beyond a point, pushing the economy into a deep recession. Hopefully, J. Paul will not make the mistake the predecessors of Paul Volcker did, and the market will also temper its expectations. Thank you for watching Be Rich. If you like this content, kindly subscribe to my channel and turn on the bell notification. If you do not turn on the bell notification, you will not be notified every time we put out a video. Once again, I thank you for your support to Be Rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.